Viv Govender is a market analyst with Lihumo Capital, and he joins us via Skype. Viv, thank you so much for joining us. Now, was this the expected announcement?
Yes, most certainly it was. If you look at what most analysts had been expecting, they thought that despite the fact that we saw the inflation number breach the 6% level by a bit more than expected, we had basically so little growth in the country that it was quite difficult for the Reserve Bank to add more interest rates onto the current burden for the consumer. That being said, as you mentioned in the piece that you just aired, if you look at the forward trajectory, it actually is a bit worse for the economy going forward. We have things, for instance, like the fact that the oil price seems to be recovering. There may be an OPEC deal coming through. Of course, there's the effect of Donald Trump and what he might be doing to the U.S. economy. His plans are very expansionary. They could be quite, inflationary. And if that's the case, then we could see the Federal Reserve being forced to raise rates a couple more times. It's almost a certainty that we could have a rate hike from the Fed in December, according to the market anyway.
Now, this is the fourth time in a row borrowing costs remain unchanged. Can we sustain this trend?
Well, one of the things they did do earlier was he did a bit of a misstep. I think the expectations were quite strong for a US rate hike, a while back, and it didn't come through. And the Reserve Bank actually hiked rates when there wasn't a corresponding US rate hike at the same time. But if you look at the political situation in the country, especially with regards to the impact of, for instance, like the ratings, towards the possibility of a downgrade, as well as what's happening with the finance minister. Every time there's any kind of news, the rand weakens. Those pressures will be inflationary, and of course, the Reserve Bank has to follow the inflationary targeting method. That's their philosophy, and that means basically if inflation gets too high and stays above the target for too long, they're going to be forced to come in and do something about it.
Now, will this rate unchanged positively influence rating agencies' decisions?
Unlikely. I think the main focus of the ratings agencies is a couple of things. One is the political impact or the political situation. You can see quite clearly whenever there's any kind of news around the finance minister, the currency weakens quite dramatically. There's also things like, for instance, the cancelling of the nuclear bill, which is obviously a positive for the economy, for the ratings agencies, because it means there's less spending happening in the medium term. But the really big reason that they are watching us at the moment is our growth rate. And if you look at the Reserve Bank's forecasts, it's about below 1% for this year, barely 1% for next year, and about 1.5% the year after. Unfortunately, given history, if you look at forecasts, it's always, this year is bad, but next year is better, and the year after is even better. And that's often not the case. Often, as you get closer to the actual event, you see the downgrade occur in terms of forecast for that year as well. So if we can actually see a bit of an uptick in our growth rate, maybe to like 1.5–2% by 2017, 2018, we could actually see something happen here with regards to the Reserve Bank, but not with regards to the ratings agencies being a bit more positive about us.
Now, the bank warns that the rand faces pressures from both the global and domestic fronts. What and how serious are these threats?
Quite serious. I mean, if you had to look at the global front, there are issues not just in the US, but also in Europe as well, and also in China. I mean, we still have some concerns about happening in the Chinese economy. There is a slowdown happening. It's being controlled so far, but there's obviously a slow issue. We still, of course, have troubles in Europe with regards to some of their growth rates being quite weak. Domestically, we do have issues with regards to the political situation, like I mentioned, but more importantly, like I said, the growth rate. We can't have a growth rate of 0.5% continuously. It would be something that would effectively be a recession in the country, though we're not growing negatively. Our population has a positive growth rate, and if we don't grow fast enough versus our population, we are going to find that the individuals in the country are going to be poorer over time.
Now, still on international pressures, Viv, how likely is it that key producers may reach an agreement to restrict output soon?
Well, I do think that they will try and do something about that. My forecast had earlier been that we are expecting an oil price increase over time. But with Donald Trump coming into play in the US, remember the US is one of the largest producers of oil in the world. He tends to be on the side of produce more, ignore some of the environmental constraints that Hillary Clinton, for instance, would have been more concerned about. So I do think that if you looked at what OPEC can do, yes, they can make a deal. But will that deal be able to stick, especially when the US is going to have a laxer, I believe, environmental policy? For instance, just to give an example, apparently the guy that was looked to be the head of the Environmental Protection Agency was someone that didn't believe in global warming.
Now, Viv, let's look at the longer-term impact of Brexit on global markets. It remains unclear so far as the terms of withdrawal are still to be negotiated. But where does this leave our growing prospects in the short term?
Well, actually, the Brexit situation turned a slightly bit more positive again. Sort of come back to Trump, because apparently the belief is that he's going to be a more favorable ally for the British than the Democratic leader would have been. But it all depends on what the political situation in the UK is. If they can hold off this Brexit, initiation, Article 50 initiation, until maybe a few months, or maybe let's say until the end of 2017, it might give them a bit more time to actually make a negotiation. But unfortunately, what's happening with them at the moment is that the right wing is actually pushing for a quicker resolution, a hard Brexit. They aren't concerned so much about the impact. They just want to get out of the European Union as quickly as possible. If that is the case, we do have a hard Brexit. We might find a much more devastating impact of Brexit. If they're able to delay it a bit and actually let things cool down for a bit longer, we could still have a more calm and smooth Brexit. That being said, even if they were to declare a Article 50 resolution today, they would still have 2 years to negotiate a deal.
Viv, thank you so much for joining us. We'll have to leave it there for now. That was Viv Govender, a market analyst with Lesetja Capital, joining us via Skype.